We told you the deal might not work out, now it hasn't, and it looks like FTX may have to file for bankruptcy. This could threaten everything. Okay, let's bring you up to date first. After barely a day of checks, Binance decided late Wednesday to pull its offer to buy FTX. On Twitter, Binance's official account tweeted, "As a result of corporate due diligence, as well as the latest news reports regarding mishandled customer funds and alleged US agency investigations, we have decided we will not pursue the potential acquisition of FTX.com." Now, the investigations refer to reports that the Securities and Exchange Commission and the US Justice Department are looking into the conduct of FTX and specifically that of FTX boss Sam Bankman-Fried. It's also been reported that FTX's legal and compliance teams have quit. More details are emerging too about how FTX has been trying to rescue itself this week by negotiating with other potential buyers or lenders. That includes OKX. Here's OKX Director of Financial Markets, Lennox Lai.
SBS asked for help. That's it. So they call me, or that they might need to chat about the situations on FTX. Then all of a sudden we're starting to know that this case could be quite serious. A couple hours later, we received another call from FTX, from SBF directly, talking about the situation has gone south to a very critical situations. So, and we only got a couple of hours to make a very difficult decisions.
OKX and others were unable to help at the time. Reports suggest FTX ultimately needs to fill an $8 billion hole now in its balance sheet. According to Bloomberg, without an injection of capital, FTX will likely have to file for bankruptcy. Unless there is a group of potential investors out there willing and able to step in and rescue FTX's customers. If there is, OKX may be one of them.
We do want to help the customer in FTX, and we also during the conversation, a lot of them involved is, hey, maybe we don't need a lot of information at the moment, but if there is somebody which is maybe a reputable VC or anyone who understands in depth about the situation, especially financial situations of what happened on FTX, we're very happy and interested to take a look and join too.
OKX aren't the only ones to feel that some sort of support is needed. While we were speaking to Lennox, Justin Sun from Tron tweeted that his team are working towards a path forward for their token holders on FTX. Both Sun and OKX have made it clear that they're now worried about the whole of crypto. It's clear from crypto prices they're not alone. Total crypto market capitalization has fallen almost a quarter since the start of the week. That, of course, was when CZ tweeted that Binance was liquidating its FTX token FTT. As of 2 p.m. Hong Kong time Thursday, Bitcoin was trading at $16,717, down around 9% in the previous 24 hours. Ethereum had fallen about the same to $1,186. Solana, meanwhile, continues to be a big worry for many given the huge backing and ownership positions held by FTX and by SBF personally. It was trading at just over $15, down 26% since the day before. The buzzword now is contagion, and not just in crypto. There are big companies thought to be directly exposed to FTX, including the likes of Canadian pension funds, BlackRock, and Singapore's Temasek. Sequoia Capital has also reportedly written off its roughly $210 million stake in FTX. The falls we're seeing in crypto prices could ultimately precipitate pain for even more players, though. Stephen Innes from SPI Asset Management said in a note on Thursday, quote, "Given how widely crypto coins are held, it could mean more forced liquidation of other assets to cover margin calls, as long position investors were massively wrong-footed." Some, though, are still sensing opportunity. Cathie Wood's ARK Investment, for instance, took a larger position in Coinbase on Wednesday. But a big issue now is how many people are trading on rumor. That has got many in crypto worried as well. KuCoin's Alicia Cao.
The only thing we could do is to make sure we could clarify every rumors and every thoughts, and to help our users, whatever they they want to withdraw and they want to transfer their assets, or they might have some questions about if their assets are safe on our exchange. So like quite lots of works, but most of them, I think, just like communicating with users.
If market participants can't really see relevant data to make informed decisions because of the lack of transparency, panic effects are a lot more common. And there have been numerous calls over the past few years for strong and clear regulation of crypto markets, and additional requirements, in particular around transparency and reporting, could certainly help restore some form of confidence.
Immediate attention rightly remains focused on what happens next, but the bigger question of how we stop this from happening again is also dominating. Senator Cynthia Lummis, who proposed the Responsible Financial Innovation Act for crypto earlier this year, weighed in despite the distraction of the midterm elections. She said the events are, quote, the clearest example yet of why we need clear rules of the road for digital asset exchanges. Exactly what clearer rules look like, though, is, well, unclear. Lummis's bill is one of 3 currently proposed in the US, and while different jurisdictions all over the world have myriad different policies, in America alone there is a huge disparity in what people in crypto want. SBF, for instance, had lobbied for his version of regulation, which, by the way, seems to have made him more than a few enemies. Here's Justin Donathan from Amber Group.
He was pushing for a lot of safeguards and regulations, which admittedly were serving his purpose, right? Being based in the US and with preferential, let's say, relationship to Washington, D.C., it was kind of seen as him benefiting from those regulations, while DeFi protocols and other players outside of the US would kind of be negatively impacted. And then, of course, this went full circle and he suffered, from bad risk management.
Others also argue better oversight doesn't always translate to better behavior.
You have a lot of regulation in traditional finance, but it seems like we have the same problems over and over again. And actually, these problems that we have in the crypto finance space, they're actually really a translation of the same skill set, right? Or malpractices that we have in traditional finance brought to crypto finance, right? So it comes with a cost. It doesn't necessarily solve the issue.
Many say better transparency actually needs to come from within crypto. Kraken, for instance, have said they are already committed to regular audits. KuCoin and OKX, meanwhile, are among those saying that they will soon be providing something called proof of reserves.
That makes sure that the purpose is very simple. Every single buck that you're seeing in OKX got 100% back by token, 100%. It is proved by technology. It's proved by independent trust.
So where does this leave us? Well, the hope, of course, is that FTX customers are able to be made whole again, but it's no longer just about those of us that lost out with SBF. The whole sector is hurting yet again. And it's not just from another huge fall in crypto prices, it's because of a collapse in trust. You can tell people to keep their keys, you can tell people to keep their coins in hard wallets, but this technology is supposed to be making our lives easier as well. As we mentioned in our last episode, it was also supposed to be more transparent. Everyone was supposed to be able to see what was happening on open public protocols, and we didn't. We didn't know what was happening with our money. How long will it take to rebuild that trust? Well, technology like proof of reserves may be the answer, but the truth is, regulation is coming in some form or another to every part of crypto and every part of the blockchain space. In the meantime, you need to stay reading trusted sources and being able to verify facts. You also need to stay up to date on this, and we at Forkast are trying our hardest to do that for you. Like and subscribe to this video to get notified about our coverage from the rest of the fallout from the collapse of FTX.